All right, good afternoon and welcome back, friends. This will be the second session on price action for the day. So part two of price action, what we'll be covering. Uh, Number one, before we go into part two, just have a quick recap of some of you who have not attended part one. What we have covered in part one is basics of price action, right? Why price action, identifying basic price action like this resistance and support, interpreting price action, and we have covered 10 plus strategies in our previous session, particularly a lot deeper into the trend line, into the rectangle channel pattern, in gaps, and few more, right? We have covered basics of candlestick and few other stuff we have covered, right? So what are we covering in this session? Number one, strong trend characteristics, how to find a strong trend, how to identify weak trend. So this will help you to compare strong versus weak trend, consolidation, trend reversal, and 15 plus strategies we'll be covering in this session. Okay, some of them are the ones which you have mentioned in our previous sessions. Okay, then how do you customize price indication, price action, parameters, advantages, caution or disadvantages, price action versus technical indicators, price action screeners in TSR, and the estimated time is about 2 hours, right? Again, as I mentioned in the previous one, we'll try to do in 2 hours, but depending on the interest and depending on the questions that come, it may go slightly higher or lower. Okay, so before we start, thank you very much being back. I see a lot of you have joined after lunch, and also appreciate your commitment on a weekend to come and attend this session, right? So what are typical characteristics of strong trend? So first thing first is basically that every candle in the price action is making either new highs or new lows, right? The bigger the candle, or the body range, the better the trend is. Average volume is increasing and moving either in upward or downward direction. If it is upward direction, obviously it is like a uptrend or bullish. If it is in downward direction, it is bearish, right? The other thing which, of course, there are a lot of other ways of looking at the trends. One such technical indicator is ADX, which tells you about the trend strength, basically strength of the trend, whether it is in up or in down, right? So an example of strong uptrend is when the candles are making higher highs and it's consistently making a higher highs compared to the previous candles, right? This is typically an upward trend. And if you see good participation in terms of volume, that should give you further confirmation. All right. Then let's take an example of a quick uptrend, right? So what we are looking here is basically, yeah. So what we are looking, going into example from one of the top stock research sample. Go to DIY screener, custom screener, DIY screener. In the DIY screener, you can look at the trending candles. Choose one which is making continuously higher high, higher lows, right? Higher high, higher lows on the body range for minimum, let's say 5 ticks. Not sure we get those stocks in here, but we'll try. So these are 5 stocks where the higher high and higher lows are being formed, 10 out of 500, right? So it's about 2% of the stocks which are giving for last 5 ticks. So when you look at the chart, these stocks are continuously making higher high, higher lows. Even better because it's happening after a downtrend, right? The strength doesn't look very good because the body of the candle is small, but still the basic things that we were looking at is higher high and higher lows for consecutive 5 days. CG Power, another example. This looks like a much better stellar move, right? Also happening after morning star, and then it's making a big green candle, almost like open is equal to low, almost near that, and then it's with good volume support, right? So such would be a better entry points of looking at it. And these are the candles which has not only given this thing but also broken the previous levels, right? Previous horizontal levels, which is also going up. If you plot something on the technical side, there'll be an equivalent technical indicator. You see that this is almost like a breaching Bollinger Band also, right, at this level. So you have a double set of confirmation. Of course, the objective of this discussion is purely on the price action, but there are certain times where you would want to validate with the other stuff, right? So this is how you'll typically find the stocks which are making higher high, higher lows for consecutive days, right? The days you can always choose. So instead of 5 ticks, you can change it to maybe 10 ticks. I'm not sure if there's any stock which is coming, no stocks, right? And instead of candle body, what you can do is candle range also you can work on, right? Let's say we do for four ticks. That means every day the candle is making newer highs and newer lows on the highs and lows. In the previous one, what we did is we did on the body, right? So you have an option of this thing. You can do it on one candle or you can do on multiple candle. For example, the candle that we have chosen is screener tick, right? Screener tick here is EOD. So same thing is if you want to look at other candles, let's say on a weekly candle. So let's see if there's any candle, right? So okay, no candle on a weekly, right? On a body range, let's see, right? So these are two stocks which are trending up on daily as well as weekly, right? So when you look at the weekly chart, so these are the stocks which are trending up on a weekly chart also, right? So every week it is making newer highs and newer lows, right? So these are excellent signals which you should be looking at in order to get onto a trend or an early trend, or sometimes depending on number of ticks that you have selected, it could be also with confirmation, right? The more number of ticks that you are doing, the better the confirmation is, but on the same time, you may miss some of the early moves, right? Sometimes the candle first or second candle makes a very good move and then followed by some weaker candles, right? So that should also give you some idea that how the stock trend or stock momentum is there, right? It's pretty simple to identify trending candle, right? So the examples that the team has selected is on NSE 500, right? On 5 ticks. On a daily chart, let's look at some of the stocks which is making on a daily tick, right? On the screener tick, right? So there are quite a few stocks. First is CG Power, which team has identified, right? So look at this, it's making very nice trend, right? So such a stellar trend, right? Will definitely have one or two reverse movement, right? As we understood that the audio is low. Okay, let me try to make the audio better. Is the audio fine? Okay, Kumar, can you see if your I get few thumbs up in terms of audios. Can you see if it's something to do with your laptop? Okay, thanks Swapnil for confirming. So Kumar, maybe you want to check your audio of your system. Maybe that will help. Okay, so that was the first example. The second example which team brought up, right, was Hindustan Copper. When we look at this, so these are very nice candles, right? Higher high, higher lows, and you see that there are a lot of basically the tweezers are also there, and there are gap ups, continuous gap up, right? That momentum is pretty strong. Momentum is extremely strong. Also, for some of you who mentioned volume over there, so you can plot simple moving average volume of, let's say, 20 days on a close price. Instead of close, we change it to volume. So the volume 20-day average volume is there. So it's clearly far above the average volume, which it is trading, right? So very easy strategy to basically to spot on a chart. The screeners like this will also help you to screen them and filter it for you, right? So that you can actually go for your trading needs. Okay, so that was one. Then the second one we have is basically weak trend characteristic, right? Weak trend characteristic is what? Where every candle is not making higher high, higher lows, right? So not necessary that if it is an uptrend that it will make higher high, higher lows in every tick, right? But there could be that the trend is up, but after a couple of trends it is coming down, or maybe maybe there's retracement, because that's how the price continuously moves up in whether upward directions or downward directions, right? What you need to also look for is the average volume. Is it really going up or down, right? And the ADX would point to a lower level, right? Prices moving can move in either upward or downward direction, right? So how do we spot these things? These things can be spotted in a typical higher high, higher lows. I'll try to give you an example out here. try to give you an example out here where it is making higher high, higher lows. So going into chart pattern screener, we have common structural patterns. In the common structural patterns, we have higher high, higher lows. We look at some of those stocks. Right? We'll look at some of the stocks, maybe let's say in a medium term. So when you see, this will be a typical trend, right? Not everything. So this again is a pretty strong move, right? But when you see, there will be a lot of retracements. So when you look at a longer pattern, right? When you look at longer pattern, obviously there will be lot of retracements coming in, one or two or a little bit more. But you have to look at the overall trend direction of the stocks, right? If you see, this is a nicely trending up and nicely trending up, right? With certain retracements, retracements over here also, you'll see that it has gone up, came down, gone up, came down, right? Pretty much on the normal market cycle. So the characteristics of weak trend. So if you see that over here, the volume is pretty much flattening around, right? Over here, the volume was good. So these are signs of a slightly weaker trend, right? Over here, it has gone up. It has gone up below this level or almost at this level, and the volume is not like significantly different. So these are signs of a weakening trend. Okay. Okay. Now there's another way of looking at it is basically this is like a pre-screen, right? Where we are looking at the another way of looking at is again we go to DIY screener, right? We go to DIY screener. We go into trending we go into OHLC trending. Now what this will tell you is a stock which is trending, which is in rising on a close price. Of course, you can look at the other period also for minimum, let's say 5 days, right? So when you look at these candles, right, these are candles which are continuously going up. Every day it is going up, right? Now, as we know, the price doesn't move only in one direction. There can be certain there can be certain exceptions, right? So let's see if we get 10 candles which are continuously going up. We'll hardly find any because 10 consecutive up candles is very difficult, right? So what you can do is basically you can work on exceptions. Maybe 1 or 2 or 3 exceptions is good. So let's try to put 3 exceptions out here. So you get these many candles where 7 out of last 10 candles went up, right? So when you look at this, 7 out of last 10 candles has actually moved up, right? So there were certain exceptions out here. There could be certain exceptions like 1 or 2 exceptions out here, but this is how you'll typically get it. So you'll get a clear idea that out of 10, if 7 or 8 or 5, depending on what you are looking at, if they are going up, that means the overall trend is there, but it's not like exceptionally strong. These weak trends also can help you with good trading signals, right? If it is formed with certain patterns or if it is near the previous support or resistance level, right? Okay, right? So this will be a very simple way, right? Also, there can be little bit more of variation on this. For example, if I'm looking for minimum, let's say 3 candle for a very short term, let's say, and I don't want any exception, and each candle should be jumping by at least a percentage compared to previous. Each close price should be changing by at least a percentage. So what you can do is you can filter out these stocks which are jumping by at least 1%, right? So this will help you to find the candles, right? With little bit of working around it, you will find some of the really good stocks, right? Where the movement is much better. So even though it was rising and then it is rising even with a further this thing. So clearly you see a breakout. Breakout comes with good volume, right? So this is going into a much beyond any of the recent things, right? So these are typical breakouts which you should be looking at, right? So and another one is this one. Again, it's jumping. So you see gap up also on the body as well as volume is there. It is rising up for multiple ticks. So possibility of it reaching out here is much better, right? So that is the idea of this thing. So this is how you can customize the trending, right? So again, repeating very simply, right? Go to OHLC trending, just going with this on a close price, right? Of let's say 3 ticks, you will find that certain stocks which are rising for 3 ticks, right? Now on top of it, if you are looking only at a certain candle, right? You're not interested in any candle. You are interested only in green candle. Let's see if we find anything out here, right? So there are about 18 stocks out of 500 wherein the price is rising for 3 consecutive ticks. Also, all the 3 candles are green, right? So when you look at the candle, all the 3 candles are green, right? So it is rising along with 3 green candles minimum. Okay. So this is how you can play with 2 things that we looked at. One is the OHLC trending, which is part of this. Again, a very flexible. It's not that you can limit or you need to limit with this. So this is on a daily tick, right? Along with that, if you want to add other tick also, right? So yeah, on daily tick it is going up, but on a weekly tick, is it also going up? So what you can do is you can add another one out here, right? You change it to weekly tick, rising for minimum 3 ticks. Let's see if we get any stocks. So there are about 8 stocks which are not only rising daily on a daily tick but also on weekly tick, right? Minimum price trending weekly is 3 ticks. Same thing is you can add more filters. Let's try to see if we can get more filters, let's say on an hourly chart. So in a same screener, right, you can mix and match multiple things, right? So if you see Motilal Oswal is the one where it is trending up for minimum 3 ticks or minimum any candle, right? So look at daily tick, look at weekly tick, right? Or also you can look at hourly tick, right? So it is rising for maybe this is better, or maybe 1 day is even better, right? So it is rising on these things, right? So these are certain tools which you can use. These are certain tools which you can use to spot the trends much earlier than some of the other traditional way, right? So a tool is pretty much ready-made. Once you are happy with the tool, you can always save it for your later things, and you can also do it on you can add alert on top of it, right? So that's how you don't have to be physically in front of machine. You can get an alert. And again, for backtesting perspective, let's say if I remove or pause this 1 hour tick, right, to see if we get more results, right? If you see this is a good strategy for you, what you can do is you can add this to portfolio. Your portfolio will tell you that is this a good strategy? Is it making money in this market, right? Strategies, again, they are very market dependent. Generally, the best strategy is going along with the trend. So as it is said in technical analysis, trend is my friend. So you can use a little bit of backtesting to see where it is. Also, different kind of stocks. So if you look at this stocks, maybe you get different results. On a broad based, if you look at a small cap, perhaps you'll get different results. Mid cap or even micro cap will give you different set of results, right? So what you need to do is you need to familiarize yourself with the strategy. What kind of stocks works best with this strategy? Not necessarily that a particular set of stocks or even a sector or a couple of sectors work best, right? So best is if you have a certain things in your mind, what you can do is you can filter these stocks on your watch list. For example, these are one of the watch list which we created on 27th demo. So let's see all stocks of 27 demo. So there's no stock which matches this criteria. So it's not necessary that you have to go with a particular stock basket. You can create your own stock basket and test it over there. Okay. So let me see if there's any question out there. How can I find stock whose trend is reversed? Yeah, we'll come to that. Trend reversal, we'll come to that, Mehul. How can I find trend strength? That is impulsive trend, right? So I'll take a minute. I know I have covered this in the morning, but just for the interest or maybe a quick revision, it's a very good tool that we have created. So now these are the stocks. Once you go into the strength, go to technical strength, go to find strong bullish stocks, right? So these are the stocks that you will get. Okay, we couldn't find anything on there. Let's go back to our favorite one, which is NSE 500. Right? These are certain stocks which are really in the extremely strong trend, right? You see the stocks which are coming here. So without spending much time on the trend strength, if time permits, we can have it again in the later part of the day. But this is how you can find the stocks which are really impulsive, right? In terms of price action. Or it not only includes price action, it includes a lot of technical indicators or retracement strategies, patterns, many more things it includes, right? It's a one single indicator which comprises 100 plus different indicators, and it goes a lot back in the history to see that how the pattern is there, right? So lot of work is done over here. It's ready to use for you guys. Okay. Any other question? How can I find trend strength? We have done it. Can you please include? Yeah, we have discussed that, Natasha. We will include that, right? For charting, yes, we have, right? For charting, we have for the screeners, we'll have, and Tweezer and Tweezer top and bottom will be covering in the subsequent slides, right? We have that as part of this particular session. Okay, so weak trend, strong trend, we have identified, right? Any questions on this thing before we proceed? Right? A very simple example of weak trend, like every candle is not making new highs, right? But overall the direction is good. Overall the direction is good. It's not breaching your stop loss. So in such case, I mean, what you have to work on is finding the right stop loss, right? Putting a stop loss too low may completely wipe out your profit, right? In such market, what you can do is lowest in last 3-4 ticks could be a good stop loss, right? If that is breached, then you should perhaps look rather than staying invested for very long time. Okay. Okay. Then the next one is consolidation characteristics, right? So consolidation, what is consolidation? Candles are either not consistently making highs or lows. You can have multiple small candles in the range. Price is moving in sideways. Average volume is not something which will clearly tell you a lot of things, right? There are certain ways of finding it. In charts, it becomes a lot more difficult, right? In chart, it becomes a lot more difficult. But there are certain patterns like candles, rectangle pattern or Bollinger Band squeeze. We'll see how to spot them. Right? So when you look at the chart pattern, rectangle pattern, right? Horizontal rectangle pattern, let's say we go into a medium term, you'll see that there are a lot of stocks which are in a very much sideways market, right? So these are the points. Either you play, if you can play between support and resistance level, or you can wait for a proper breakout or breakdown, right? So these are certain stocks which are coming in that typical sideways zone. Also, not part of this thing, price action. What you can also use is basically Bollinger Band squeeze. It will give you a very good idea about the typical sideways or consolidation market, right? So what Bollinger Band squeeze is, it tells you, it uses standard deviation, a statistic formula, and the price, when the price range is within standard deviation for pretty long time, right, within certain range of standard deviation, then it is in a consolidation area. Like for example, this stock is pretty much in the sideways, right? So what you should be doing is, you should look at some of the stocks in this area, right, and wait for its either breakout or breakdown, right? It's a very powerful tool. It's a very powerful tool, though not part of this thing, but this price action analyst can also look at them and see that, you know, where their next possible movement is, and then based on the breakout breakdown, they can look for a good trade. Okay, so we have seen two patterns, rectangle pattern and Bollinger Band squeeze, and obviously with this, depending on your level of comfort and level of expertise, what you can do is, with this you can create a very powerful strategies, right? Each strategy would take about 10 to 15 minutes, so I'll not be taking all the strategies, especially when it comes to creating the consolidation, because consolidation is not something which a lot of people very keenly look at, right? What you keenly look at is breakout, breakdown, right, or a new trend, right? So skipping that part from this discussion, right? Any questions on this so far? Can we have multiple charts in one window? Okay, though not part of it, but I'll quickly take an opportunity to tell that. So let's say what you are looking at is, basically I'll remove Bollinger also, right? Just very simple. What you can do is, you can add another stock of your choice. Let's say we add Nifty, right? It's something which is commonly understood, right? Also, let's add TCS and a banking stock. Banking stock, right? So what you can do is, multiple stocks in one chart. This is one way of looking at it, is purely in terms of returns. Also, what you can do is, you can tile them to see next to each other, multiple different stocks, or you can stack them. If this is too small a screen for you, what you can do is, you can stack one below another, right? You can stack one below another one to give you a comparative idea. You can if you draw anything on this thing, then it will draw on all the 4 charts, right? All the 3-4 charts, it'll draw this thing, right? So this is one way of adding multiple stocks in this, right? What it cannot do at this point of time, what it cannot do is basically the time frame is pretty static. So if you're looking on a daily, then you have to look at daily for all the stocks. Very soon we are working on breaking this thing also. So one stock you can, so same stock you can look on a daily, weekly, hourly, maybe 15 minutes, or whichever time frame you want to look at. So you can add multiple stocks in a single chart, right? So this will help you to visualize, especially when you see there are 4 results coming in, right? So you may want to add all the 4 stocks one by one, right? So you add this. So Aditya Birla being one of them. Is Aditya Birla better than Aurobindo? So let's see. We go into tile and Aurobindo, right? So this is how you can right? This is how you can compare all the 4 together, right? The next one is Avanti feeds, right? So we add Avanti, right? So this is how you can see multiple different stocks in one single view, right? Not sure if it answers your question or it satisfies your basically your requirements, but this is something which you can do with TSR charts. Okay. So this being a very simplistic way of looking at it, right? So where we were in the consolidation phase. So 2 ways of finding it. One is the rectangle channel, and the second one is Bollinger Band. Of course, there are many more ways of doing it, right? Let me see if there's any question before we proceed. Sir, can we add Nifty, Bank Nifty in one chart? Yeah, Salja, I guess it answered your question, right? Sharon had a question related to volume. How can we find previous high volume nearly 3 to 5 times greater than any of the previous days generated by the stock market, right? So what you can do is, again, not spending too much time on this one, what you can do is you can compare with previous volumes. So you can go to any of the volumes in last 100 days, right? And which is below, let's say above previous screener volume, right, by 100%. So this is one way where you'll find that the volume is higher than the previous day's volume, right? Is double than previous day volume. So this is one way of doing it. Then similarly, you can add multiple of these things to create the strategy that you are interested in. Okay. So this is basically how you can add multiple volumes. To answer your question, Mehul, so currently the charts does not have capability of showing multiple ticks in one view. That means daily, weekly, monthly. What you can do is you can open multiple tabs and you can switch between different tabs, right? For example, one tab is this one, right? Gujarat Gas. The second tab is the same thing. For example, I'm playing something on Gujarat Gas, right? So I'm looking at let's say 50-day moving average and RSI, right? So what you can do is you open another chart, right? By default, it will open with Gujarat Gas only on the daily tick with all the indicators that we have selected. It will be there. You just add weekly or anything, right? And this is how you can compare, though not the most elegant way of doing it, but it is possible, right? So you can mix and match different indicators. You have MACD here, right? And you don't have MACD. You can have let's say parabolic SAR here, right? So you can mix and match. Okay. So that was a quick stray from our regular this thing. So consolidation we have understood. Also we have gone through some of the product features, right? That is the idea, right? Typical consolidation phase is the price where it is in a certain range, and then what you should be looking at is a breakout. And the breakout, if it breaks out in this particular example, which team has found out, is a very nice breakout. It's a gap up, number one, right? Chambal fertilizer on so it is a breakout on a 5-minute stick, right? That means next day it opened up and then with good volume, and then it continuously went ahead, right? So what you should be looking at is breakouts, and this is also like some of the strategies we discussed in the morning was basically gap up and range gap up, right? It's following in that particular direction. Okay. Rakesh wants to know how to add 20 moving average on volume, right? So you go here, the EMA, SMA, all these things are here. Go to this zoom button, right? Oops, sorry. I was on PowerPoint, sorry for that. What I'll do is I'll go into a simple one, daily chart, right? I'll remove the noise from here, right, so that the focus is better. You are looking at volume. What you can do is you can put volume, EMA, SMA. Let's say you're looking at 10 days volume. Instead of close, you can also plot open, high, low, and other variations. The last one is volume, right? Once you plot that, the volume also comes down here. Okay, so Mehul, if time permits, we'll cover that. Otherwise, we have covered this in the morning session, right? Keep your question. If it's possible, then we'll do it. Can you explain weak trend and strong trend, right? See, strong, it is very subjective, Nagaraju, weak and small trend, right? What we have seen is, if you are really looking at strong trend, right? The example that we have shown you, is basically the candles, right? Continuously making higher high, higher lows, right? You will not find this occurrence for a very long period, because after some time, right, what happens is, after some times you'll find at least one stock. So what we are doing out here is higher high, higher lows of a body, candle body, for minimum 5 ticks. So you'll find that certain stocks are there, right, which is making pretty good higher high, higher lows for consistent period, right? So this is trending up, higher high, higher lows, right? But they will all in a real world. In a real world, what you will be seeing is much lesser of these. This will not occur for more than 3 to 4 ticks consecutively on a very regular basis. What you should be looking is OHLC, wherein the candle is rising for, let's say, 5 days, right? And then you'll find too many stocks, right? 5 days rising is not a very big deal, the close price. So what you can do is you can look for body range rising for last 5 days. So let's see how many of them are there. They are none. So body range continuously moving up on, on a body range is none. So on close or maybe on highs, right? Let's see on highs. So there are about 9 such stocks which are continuously making new highs, right? This is another strategy of looking at it. Whenever it is coming down, then it is so it is continuously making up. So it's continuously still in the bullish mode, right? Highs, it is making continuously high. So every day's high is higher than the previous high. So this is again a bullish signal, right? Or bullish behavior rather, or right? Not every candle will continuously move in one direction, right? So if you are looking that in last 10 candles, you want to see that at least 7 times it is going up. So that is where you'll be able to find this, right? Also, what you should be looking at is the last candle should at least be above the previous candle, right? So what you can do is you can mix and match with different things, right? So basically what you can do is you can look at latest day close is greater than previous day close. So instead of these many 13 stocks, the number of stocks will come down, and this will help you to filter your or smoothen your strategies, right? If you want, so what we have done is just higher than the previous close, right? What you can do is higher than, or the close is higher than the previous high. So just changing it to the previous high, from close to high, this is how you will be able to filter. So there's only one stock wherein minimum trending period is 10 with 3 exceptions, and the latest is higher than the previous high, right? So you'll get there, right? You will get there. So this is how you can mix and match strategies. To fine tune to the level you feel comfortable. It is not about learning a strategy. Technical analysis is not about learning a strategy. It is more of basically getting bonded with a strategy, getting comfortable with a strategy, do a little bit of back testing, understand it well before you get into this thing, right? So there's a lot of so every stock may behave differently on a different strategy. Every market, every asset class, all right, every market capitalization, categorization of stocks, all these things will behave differently. So the idea is, what is that you are looking at, number one, and what strategy works on that, right? What is the time frame that you look at, how many days you want to be in, what kind of basically profit are you looking at. Some people are happy with a couple of percentage of profit. If they get in a day, they are very happy, right? Especially those guys who do FNO, right? 1 or 2% consistently if you can make, and reducing your risk to a very low level, maybe somewhere around 8 to 2, right, or 5:1 kind of a risk, right, then 1% is also very good when you're looking at a high stakes game like future and options. Okay, so this was a quick recap of some of the stuff that we did, right? I see a question, sir, will you provide recording? We'll try to. We can't commit. It depends on some of the other things, right? If we are able to, we'll try to. Morning session link did not work. Mail to support. Sorry for that, Manikam. There was certain technical glitch. We admit a morning session, but we'll see if we can share the recording with you guys. Right? Apologies for that. We did had that session. Next time, whenever such a thing happens, right, what you should be looking is once we commit, right, to a session, what you should be looking at, go to YouTube where you have gone to today and look for the live sessions for Top Stock Research. That's where you'll find it. But again, that's not the right way. I mean, there was a glitch, not sure how. The link that we shared somehow didn't open from YouTube. So maybe there's some learning from our side, which we need to do, right? So again, going back into the discussion of where we were, right? So this is consolidation, typical consolidation. What we can see is basically we can see from rectangle channel, horizontal channel, or we can see from Bollinger Band. Again, that's a good example. Or you can do OHLCV for comparing these things. Weak trend, it has given, and then it's at that level, right? So again, this is not a bad place to be in. At this level, it is trying to find the direction. And since the parent direction trend is upward, the chances of it going upward is higher, right? So you need to look. Once it has broken, then it is again given this, and then it has given with much stronger trend, right? So finding or identifying the trend initially, maybe this is where the weak money was. Remember guys, in the morning session, we had this weak money concept, then slightly less informed money, and then again, this is a strong money, right? With a lot of participation, these things are there. So you'll see these kind of cycles very often in the charts. Okay. Then trend reversal characteristics. Somebody mentioned about trend reversal. Let's see what the trend reversal is. Trend reversal occurs at the end of the trend, where the new trend starts in the opposite direction of the parent trend, right? Where can you identify these trend reversals? You can look at one of the chart patterns, or you can look at the breakout and breakdown. Okay, and now we have a dedicated chart pattern session on 4th of Feb, right? Again, like this, we'll try to keep it a session on a Saturday morning, where we hope majority of you will be able to join and benefit out of the learnings that we have had. So chart patterns and breakout and breakdown, right? So there are a lot of different chart patterns. What do we have? So, okay. So this is an example of trend reversal, right? The stock is moving up, and then from this place, there's a bearish engulfing on top. Again, a very nice signal. If it is a bearish engulfing on either on a top or a down, that is where the possibility of trend reversal is there. Not everybody should jump in. Or it's only some people who feel very comfortable and confident they should come and jump in. Otherwise, they should wait for a confirmation signal. Once that has happened, it has given a pretty good downtrend, right? Okay. Looking at some of the trend reversals pattern, right? So a very good trend reversal pattern would be for a very simplistic way, bearish. Maybe I'll take you to a much simpler example. I'll take you to candlestick, because that's what we have been discussing in the morning. Looking at bullish engulfing, on a daily time frame on, let's say, NSE 500. So these are typically trend reversals pattern, right? Bullish engulfing is a trend reversal pattern, which is, as the name suggests, it's a bullish pattern, right? What you should be looking at with this, what you should be looking at is it with jump in volume, right? Is it with jump in volume? So what we'll do is we'll just filter out anything where there's a jump in volume. Either you can do that way, or you can filter out on this, and all the jump in volume comes out here, right? So there are 4 or 5 different jump in volume. Now, is it in uptrend or is it in downtrend? So the better example would be is when it is in downtrend, engulfing has happened and it is with volume. So let's look at Varrock. So it's a small engulfing, not too great an engulfing, but it's with good volume as we have seen, and it's almost at a downtrend, right? It's almost at a downtrend. Had this candle been little bit longer, starting from little low or start little bit high, then it would have given a much better signal. But these are typical this thing, right? Reversal pattern. So a lot of chart patterns are this thing. Number one, so reversal patterns, or it can be continuation pattern, as we see in this place, right? It's already on a height, it's already on a higher level. Same pattern, if it is formed with a good volume, it can be a continuation pattern. There are certain other examples which are reversal patterns. For example, double top, or let me give an example of double bottom. That is, people like to be more on the buying side rather than selling side, right? So you see that there are certain stocks. Let's look at some of the medium term stocks. DCM, right? It is coming down, right? It has formed a bottom. Then again, bull tried to raise it up, couldn't raise it. Again, bears came in. Again, the bull is trying to take it up. And this is how a typical reversal pattern is there, right? So the downward movement is completely stalled. You might see certain horizontal or sideways before it can really go upwards. So this being another one example, we'll see anything on the long term, right? The price is coming down, right? It has come down to a level, then it retraced a bit. Again, it came back almost to the same level, and then it has gone above this level, right? So these are all reversal patterns which you can be looking at, right? Taking it to DIY screener, some of the reversal patterns, right? So we look at maybe a bullish reversal pattern, bullish engulfing, where the latest, right? Where the latest maybe 10-day low was made, zero tick back, right? That means the latest tick, where zero is latest is mentioned out here. I know it's slightly counterintuitive, but okay, no stocks. Okay, so there are two stocks, right, where there's a bullish engulfing, right, happening at the bottom of, so where the lowest is less than this. So this could be a good sign, right? Now, if you want to add, whether it is with good volume, what you can do is you can add volume above previous tick volume by, let's say, 50%. So instead of 3 stocks, we should be getting lesser number of stocks, 2 stocks, right? So you'll see not only the bullish engulfing out here, right, but also at a bottom with higher volume than the previous day. So this is how you can fine tune. This is a better example, right? It's clearly downtrend, and then it came down, crossed this level. So basically the bulls are clearly in charge with some better volume, not significantly high volumes. So in terms of price, 1 or 2% is good. But when you look at something which is purely in volume perspective, it should be at least 100% more than the previous one, or maybe 60-70% of the average volume, right? We have seen how to find the average volume. Okay, for some of you who wants to know how to find average volume, we have seen that in chart, right? How do we see that in a screener? So you go compare, right, above SMA, sorry, okay, right, close instead of close, volume, right, above, let's say 15 days volume, or maybe, yeah, 15 days volume, right? So you'll find all those stocks where the average volume is more than 15% of the previous day volume, right? 15 days SMA, like, so you'll find all these stocks. So this is another way of doing it. Now somebody mentioned that how to find the candles, right? Candle size. So let me reset candlestick. So one thing is, what you can look at is basically the latest day close is above latest day open for finding a green candle by, let's say, 2%, right? So this is how you'll find a candle where the candle body is at least 2%, right? Candle body is at least 2%, right? So higher candle body, right? So from this, you can change it to any other percentage which you think is a good candle body, right? So not restricted with the default one. This DIY screener will help you to find and fine tune these things, right? So you can find this, as well as you can look at continuous where it is number one green candle and it is at least 2% compared to the previous one, right? So you can mix and match multiple different things, right? Wider candles, consecutive wider candles. You can look at something like this, right? So this is how you'll be able to find the big or the slightly larger candle. Okay, Wrinkle has a question, right? How do you join this session, sir? So basically go to Top Stock Research, right? There you'll find at the bottom, you'll find book session. That's where you'll get it. If you need any further help or support, you can always call or email to one of the customer care executive out here. Okay. So I hope that majority of you know how to join the sessions, right? So I don't take much time. Otherwise, what you can also do is there's a book TSR session. This is the link where you can go and you'll get the list of sessions which are in coming days, right? Feel free to use them. Feel free to forward it to any of your friends who may be interested in this kind of knowledge. Okay. So we have understood uptrend, downtrend. Any questions or any confusions regarding this? Now, basically, there was a question on rounding bottom, which we'll cover on 4th, right? So I don't want to get into too complex because rounding bottom itself will take some time to explain. That might break some of the rhythm of this. We have a dedicated session on chart patterns, right? So one session will be there on chart pattern, right? The simple chart patterns. There will be another session on the harmonic patterns, right? Harmonic patterns, we have that implementation with us, but we are yet to release it. We are fine tuning that thing. Okay. How do you do back testing? You can go to the previous text, right? So you can go anywhere in the time machine where you can find this set of information. For example, what were we looking at is OHLC where two broad candles, right? So we go into, let's say, P minus 10 tick, run the screener, right? So as of 30th of December, so you find two candles which met this criteria, right? What date was it? 30th of December, right? So when you look at this, 29 and 30, two candle where this condition met, right? Again, 30th of December, right? Two candles where this condition met. Okay. So you can go back in the history and see that if it is basically meeting your criteria or not, right? So a pretty powerful tool. That's why we call it as a DIY, right? We don't want to give you a lot of things. So it does contain a lot of ready-made tools, but also at the same time it gives you flexibility to create your own ones. Okay. What is last engulfing candle? We'll come to that, right? Engulfing, okay, maybe I'll take just, because this is important, I'll just go and look at it, right? So what we'll do is, okay, we go into bullish pattern. So, I mean, of course, this is reserved for another session, but you can always go and look into these things. So engulfing is something where the candle, right, the latest candle completely engulfs. That means it completely surrounds the previous one, right? So if it is green color, then so if it is a green candle, it is bullish engulfing. Otherwise, it is bearish engulfing, right? So this is the place. Again, it's a public view. Anybody can come. So all the common candlestick patterns are here. And when we have a session, I think it is either on 18th or 25th of Feb, the candlestick patterns. Will cover in greater details, including lots of some of the interesting backtesting results, right? So now, whichever things we go, right, post maybe around second week of Feb, we'll go with a lot of backtesting results, so that will tell you that it's not only a theoretical pattern, but in practice, how well it performs on a different time period and on a different stock baskets, right? Mid cap, small cap, we'll try to have very detailed results on that. Okay, I hope bullish engulfing is resolved, guys. Right? CPR and Camarilla, yeah, we do have. I'll not spend much time because there's a separate session again on that, right? These are all goes pretty low. What we are covering is at a very, very high level price action stuff, right? Wherein there's no static formula, fixed formula, right? It's just a pretty more on the abstract or a subjective world where we are in. So go to pivot point. This is where you'll find all the pivot points. So you are mentioning Camarilla or central pivot point. These are mentioned out here. Okay, it's slightly beyond the scope of this session, so I'll take an excuse from you, Sunil Patel, right? Can you show up more time frame volume checking by SMA? Sharon, if so, basically, if you're looking at the volume, right? Again, it's not typically part of price action technically. So volume is more of basically supporting. Some of the analysts will completely disagree that volume should not be even part of price action, but it's more of a supporting indicator. So maybe when we cover this volume, right, or maybe we have another thing on volume, we will go into details. But there are two ways of looking at the volume. One is directly on a chart, right, where you can look, you can plot volume. That's number one way of doing it. And number two is slightly twisted. That's perhaps the reason why you were not able to find it, right? So it is part of moving average, right? Anything which is part of moving average is here, right? You go customize it, MA on close, and it's price slash field, right? So you have to choose volume out here. So we consider OHLC as one single thing, right? That's why it is out here. Not the most intuitive one, but you can get there, right? So you find the stocks which are above, below, so crossing above a certain moving average or a below moving average within a moving average, and so on and so forth. There are multiple different ways of looking at it. Okay, so before we go to the next session, any other questions? Intraday, all these things, maybe we'll take, Asif will take a small session towards the end of the things if time permits on the intraday, right? Otherwise, all these things, whatever we are talking so far, makes sense, especially the price action, right? As you remember, right, price action is movement of price over a period of time, right? Very simple definition, right? So it will work on 1 minute, it will work on 1 second, it will work on 1 hour, it will work on 1 week, 1 day, 1 week, 1 month, it will work on 1 quarter also, right? Price action, right? If you're really looking at the extremely long-term trend, right? So we got a one-on-one requirement that why don't you plot a 1 year chart. So far, the best we have is, sorry, I get confused. So far the best we have is quarterly. So you can go all the way to 25 years and you go to quarterly, but some people prefer 1 year. We are yet to find a solid reason of getting into 1 year. So you can plot up to quarterly chart, all the technicals and other things. 1 year chart, if we see a strong reason, we'll definitely add them, right? And then along with this, we are adding about 5 or 6 more different kind of ticks out here. Okay. So we understood trend reversal, right? Maybe another one, looking at the trend reversal, right? So go reset it, get to the clean slate, trend reversal. Now, basically trending candle, right? When you look at the trending candle, so what we are looking at is there is a higher high, higher low on the candle body for, let's say, 5 ticks, followed by a lower price than the previous low. That means it is rising for 5 days and then followed by a change in direction. So when you look at this one, right? So we got 2 stocks. One is Max, where the price was continuously going up, higher high, higher low, right? And then it has retraced back, right? The second one is this. So it was continuously in upward movement and then it's coming down. Now, once you get an idea about these things, right? There are certain patterns which you can easily point out, right? This is a pattern. Anybody wants to mention what is the name of this pattern in this chat? That will be helpful for others, right? I don't want to give them the idea. This is just opposite of this, right? This is just opposite of this. So these patterns, right, once they form, right, it has a lot of meaning, and depending on the next candle, it has a meaning, further meaning, right? Somebody wants to mention that in the chat. Bearish engulfing, yes, it is. Bearish, so the pattern which I'm trying to get it from you is, this is definitely bearish engulfing. This is far better than or more powerful than bearish engulfing. It is a variation, slight variation. Doji, yes, Doji is there. Also, there's another name, right? So maybe a session next month which we are having will help you to find these things, right? These are very powerful. Yes, Swapnil, yeah, you are right. Morning star, it's close to morning star, right? This is evening star, this is morning star, right? Very powerful pattern, right? So yes, you are right when you said that bearish engulfing doji, all these were good, right? But these are good, but these are slightly less reliable. So when you go into here, right, you'll find typically that what is the reliability of pattern, right? It will also help you to find the reliability of pattern. Okay. All right. We'll come to head and shoulder. We'll come to head and shoulder, Mehul, in a short while, right? We'll take the example of Coal India also. Okay. So this is one way of finding the candlesticks, right? This was in body range. Let's see on the HL range if we can get anything. So again, Oil India Limited, it was a good move. Same stock we got, right? So this one, the high-low range, right? Instead of the body, this time it looked at a high-low range. Okay. Do we also? Okay. Here, what we'll also add in coming days is basically to show only green or red candles. Initially, we didn't want it to go in there. But because it might, so first of all, it already looks little overwhelming, right? Without a session like this, for some of those guys who are not very familiar, it looks overwhelming. Gradually, once this gets much more used to, and when things get better, right, we'll add more features here where you see only red candles or you see only green candles, and more variety will add in the coming days. Okay. So that was trend reversal. Mayu, did I miss anything on trend reversal so far? No? Okay. So the next, so we have a series of strategies, right? OHLC, trending, trend reversal, trend retracements, price action engulfing. Okay, this is slightly different than the engulfing, bullish engulfing pattern, right? This is much bigger and more powerful. Price action patterns. This is where, Mehul, this thing will come. Head and shoulder, price action patterns, open range breakout, right? So the one which are very powerful, right, are these ones. These four are actually very powerful. We have briefly touched upon some of these things, right? These are all very powerful, right? So I'll suggest, if you don't have very important reasons to miss, stay till range breakout. Very important and powerful. Open range breakout and range breakout. Okay, OHLC trending, where last n candles are trending up, right? Open is trending up or low is trending down. Last n candles trending down, right? Or trending up, or only green or only red candles, right? So the example, right? In this particular case, there are 4 candles which are continuously trending up, right? Which tells you that it's not only bullish, but the momentum is pretty good and the conviction of market in its upward direction is pretty good. Okay. Okay, so coming back to our favorite place where we started this entire session, trending candle, right? So going into higher high, higher lows, you can either work on bodies or you can work on HL. Clicking on 5, right? You'll see 5 candles which are continuously going up, right? In terms of their range. Some of them may be green, some of them may be red. If you are interested only in one, I mean, in this one, we don't have that yet, right? To get only green or red candle, but we'll add that shortly. So this being one thing where you can get a trending candle. Same thing is on the lower high, lower lows. When you look at lower high, lower lows, for minimum 5 ticks, you'll find some of the stocks meeting the criteria, lower high, lower lows, right? So when you look at these things, right, unless, I mean, also I mentioned very loosely in one of the sessions, I think in the 24th or 25th last month, is basically consider this, right? Trend, it will continue to move in that direction for multiple reasons, right? So if a stock or an asset class is in a trend, right? First of all, there's an inherent reason why it is in trend. Number 2 is looking at the trend, more and more technical analysts try to jump into that direction, making the trend all the more stronger. So the loosely analogy which I try to make it is, consider this as a Newton's law of motion. When a body is in motion, it will remain in motion till an external force is applied. So same thing is, here the external force would be a news or a corporate action or maybe some macroeconomic things, right? Which could help in changing the direction. So the key is to finding the trend and riding the wave on top of it, right? Staying on the trend for till the trend is breached or to that level, right? Here it is in trend, right? So if this level is also breached, right? So it is likely to make newer lows, right? So all the more it has chances of going down if it breaches with good volume and this thing, right? So first of all, it is in downtrend, strong downtrend, and this support level is breached. All the more reasons to to be convinced on the direction of trend. So trend is very important. Trend is, my friend, is what you have to look for, is this thing. Okay. So same thing is for other stocks you can look at. Now, how do you see the reversal? We have briefly touched upon on the reversal, right? So lower high, lower low, and where the latest is above the previous high, right? Latest is above previous high. So when you look at this one, right? So there's a downward trend, and the latest is changing or basically breaking the trend, right? So these are certain points. Aggressive traders should look at it. Slightly conservative should look for certain confirmation out here, right? If the next candle opens higher with maybe different volume, or maybe some pattern is formed out here, right? In such cases, what you should be looking at is a pattern called Tweezer, which we'll cover in the next sessions, right? If such a pattern is formed here, even better, right? Morning star, evening star, pin bar, there are a lot of different patterns which you should be looking at. If you understand the chart patterns like double top, support, resistance, well and good. If you don't understand it or don't want to understand it, again, there are other ways of looking or spotting these patterns out here, right? Here it is bucking the trend, but not with very strong conviction, right? It's a very, very light conviction. So overall the trend is downwards, right? So just catching on this is with risk. It could be like catching a falling knife, which you'll not be able to catch the knife. Also, you'll start bleeding, right? So that's a typical saying in our world. Okay, so this is how you'll typically see, right? Smart people or more daredevils will get in at these levels, right? Get in at these levels, and obviously, when you are getting at these levels, then stop loss is the key, right? Because you are first of all, you'll be the early mover, number one. So the advantage of a move is much better. It can give you a stellar returns, but the possibility of hitting the stop loss is also high, right? So be very careful regarding those things. Okay. What else we have? So we have price trending up. So the other example of price trending up is OHLC. We have seen the OHLC one, right? The price is going up. You can look at a high on a rising trend for last 5 days, 7 days, right? Let's say 5 days, and you're looking at any candle, right? So this will be the starting point, right? When you're just looking at high, then you will get all the stocks which are making continuously high. Fine tuning it, you can choose only green candles, right? Go ahead, do it. You'll find only one stock which is having green candle. Want to add an exception? 1 or 2 exception is fine. So just add an exception of, let's say, 1 candle, or you can add more exceptions, right? So when you add an exception, you'll find some of those things where actually it was not making continuously high, right? For this, for example, this one was not as high as this one, right? Or maybe, yeah, something like that, right? So 1 or 2 exceptions are acceptable in such cases, right? Want to get the latest candle as green? Obviously, you can go and add that green candle, right? A slight variation of this trending up by minimum percentage, minimum 2%, what you are looking at every day's high is going up by 2%, right? So go play here, right? So every day high is making newer highs with at least a good percentage, right? So these are stocks which should be there, right? Again, I tend to go into Bollinger, one of my favorite indicators, right? Look at this, it must have breached that level, right? And it has done, right? So similarly, whether you start from price action or you come from technical analysis to price action, whichever direction you go, you will find at least complementary or similar signals, right? So I'll try not to get into technical analysis or technical indicators as much as possible. However tempted I am, right? But that's one of those things which obviously helps you to get, especially during the initial phase of this thing, right? Learning. Okay. So what we have seen is this thing trending up, right? Same way trending down, right? Trending candle, we have seen trending candle. What is trending candle? Trending candle is basically the candle itself is trending continuously. So we have seen briefly a candle is trending up for 5 days, right? So you'll see the candle itself is making continuously one-way movement, right? Every day it is trending. So these are certain things which will help you to filter out stocks, right? Which will help you to filter out stocks, and then depending on whatever learning or whatever strategy you have, you can get into that, right? The idea of these screeners, right? First of all, tell users some of the strategies. Screeners will save a lot of your time, right? As I mentioned a while back, it works on daily tick. Also, it will work on a 15-minute stick. Let's see on a 15-minute stick, how does it there? Biocon is there, right? Which is trending. I'll reduce, okay, it's visible, right? So I don't have to change it. So it's trending on a 15-minute stick. So anybody who had come early over here, right, or after this consolidation would have got pretty decent returns, and perhaps the direction may be continuing because it has broken some of the important levels, right? Very near this level, if it opens, it gives gap up, then even better, right? So this kind of candles. So don't restrict yourself with one tick. Try playing with other ticks. On a 30 minutes also, I'm sure it will give you trending candles, because 15 minutes is 30 minutes is a combination of this thing, right? Even on hourly it might give, right? So something like that. So once you start playing with these things, you'll have much better idea of converting the ticks. A lot of things you can do it in your mind, right? Otherwise the tools are there very much to help you, right? So the more you spend time reading these price actions, it will be very, very, very important. Okay. All right. So trending candles we covered, right? Any questions on this so far? Right. No questions on this. As mentioned, CPR will take a separate session, so don't want to mix too many things. Bank walk is something which I have not understood, Tarun. Maybe you want to use a camel case, not all bold case, right? Or uppercase rather, right? The trending candle, we have an example, price nicely trending up. What you need to look for is basically when it is in this thing, right? Work on stop loss, trailing stop loss. The volume is pretty much supportive. Work on trailing stop loss, and this is where you'll ride on the profit, and stop loss will limit your loss, right? That is the key. Riding on the profit and minimizing the stop loss. 60% returns is excellent returns, guys. Don't try to overdo, because that's where you'll end up your brokers making money and you losing money, and perhaps would add a lot of stress also. Okay, low range candle trending up, high low range candle trending up, right? And the example out here, right, which is there, right? Trend reversal, we have briefly seen N candle going up, N candle, and then latest candle breaking down. Do you want me to repeat this, or I can skip for now? Guys, familiar with this one? Any comments? Nope. So I guess everything is going good, right? Same thing is spotting. Spotting these reversals are very important, right? Thanks for mentioning that. Yeah, I'll skipping that, Rakesh. Okay, trend retracements, right? So what is trend retracement, right? So basically, as I said, right, the stocks, even in the morning example, if it goes from 1 to 100, it will not go to straight 1, 2, 3, 4, 5, 6 or multiple of those, right? It'll go to up, then come down, go up, come down, right? So this is where this thing is, trend retracements. Now, basically, how do you spot these things, right? So in the morning session, remember, trend line, we discussed one thing, we discussed trend line. That is something which will help you, right? Till the trend line is breached, you are in the trend, right? So trend up, price will continue to be in trend till you stop those trends, right? Till you stop those trends. So you will see, I mean, invariably, you will see certain trends coming down, so retracing a bit. That's where you'll see a lot of people suggesting, right, buy on depths, buy on depths. when when the market is good, right, you'll see all the analysts talking only one thing: buy on dips, buy on dips, right? This is what actually they mean, buying on dips, right? So there are various different ways of doing it. One of them is Fibonacci. Of course, not in the scope of this session, but a rising support trend line, right, is, let's say, what this one is. So the price is, overall, the direction of the trend is upward trends, but you'll see small patterns, small retracements, multiple small retracements at different levels, right? So this is where basically uh, you think that, when you run very fast, right, you have to stop for a while, right, to get the energy back, and then you again start running, then you stop, you take rest, then again go, right? Similar way, there are these things. If you talk on basically on the Dow theory, price moves in trend, and you have multiple trends within a trend, right? So this is a long-term trend. In that long-term trend, you'll have multiple small trends. What you need to be really cautious if you are dealing with these kind of trends, right, is basically identifying the trend and identifying the key stop losses, right? The area where the stop losses are, right? So typically so you can use various different formulas. One of the formula is the lowest level of the previous low, this being a stop loss, this being another stop loss, this being another stop loss. If this was the case, you would have hit stop loss somewhere around here. Possibility of hitting a stop loss was there, right? But again, it almost retraced from that level, right, and went up. So different analysts will see these things at different levels. Some people will see that, stop loss is breached, but looking at these things, right, a very small doji, so its effectiveness is much lower, right? Very small candles, the effectiveness is much lower compared to a clear breach, right? So use your best judgment to find where the reversals are, where the stop losses are, and where you want to ride in. Once it goes above this, then the trend is intact, and then it moved again back there, right? So price moves in a trend. In a trend, you'll have multiple sub trends. That's what you need to start spotting them. Okay, so before we go into engulfing, let me show you some of those examples of trend lines, right? Let me take you to rising support trend line. We'll see this as an example, right? You see the example, right? It's continuously going up. So this is the main trend, right? This is the main trend, right, where it is going up, up, up. So for a conservative trader, this is the point where the stop loss should be. Second stop loss, trailing third stop loss at this level, fourth stop loss at this level, right? Now once it crosses this level, this should become your stop loss. So what you are doing is you are pretty much riding on the wave and limiting your stop loss, right? Riding on the wave and limiting your stop loss. That is the real idea of this thing. For somebody who can spot, somebody mentioned head and shoulder, right? So we go little right, right? So somebody who can spot head and shoulder with little bit of this thing, you'll be able to spot multiple patterns which you without much of practice you would have never spotted. This is a very easy or loose variation of a reverse head and shoulder, a bullish pattern again, right? So such a reversal pattern happens on a uptrend, that too near the top, tells you lot more about it, right? About the quality of this particular signal, right? So what we have seen is price moves in trend, right? Price moves in trend, and the trends keep on changing, right? The trend keeps on changing. Let me go into some better tick. So we are already on daily ticks. Let's see on the long-term chart, a chart where Coal India, somebody mentioned Coal India, right? So for some reason it has come again, right? So it is in a nice uptrend, right? So it is in a nice uptrend. So this would be stop loss, this would be second stop loss, third stop loss, right? And we are near that stop loss. If it were to retrace from here, right, it will be continuation of uptrend. Otherwise, the trend is broken. So this is a reversal trend, smaller trend in the long term trend, right? You see the trend is continuously going up. It's going up. Again, there's a price here. If it doesn't breach this level, then the trend is intact, right? So anybody who has Coal India, just pray for this to go up so that the trend is intact, right? And more people jump into the stock to take it further high. Okay. Any questions on this so far? how to find stock which are in consolidation. Nagaraju, we have covered this, right, a while back. Rectangle pattern, Bollinger Band, right, that will help you. And also you can use OHLC compare, right, to plot that. Okay, you can compare OHLC. See, another example of OHLC compare I'll tell you is, basically what you can do is you can go to DIY screener, right? You can go to DIY screener and say that right, or maybe over here, right, is the latest candle, right? Very simple. You can make a lot of different things, right? Latest close is within 1% of previous day close. I'm just making it up, right, just for the sake of this example. And then previous day or latest close again is within P minus 2 close or within 1%. So what I'm trying to do is I'm comparing the close which are in a range from the latest. It is within that range, right? So let's see these stocks. Okay, nothing in 15 minutes. Okay, 1% is too big. Let's put 0.5 or maybe 2. Let's put it 2. Let's see if we get anything. All right. Okay. Let's reset. Maybe some old traces from the previous one. Latest take close is within close within, let's say, 3%. Some traces there. Let me just clear off everything. Strange. Okay. I don't know why it's not coming. It's very strange. Maybe within is having some issue. Maybe. Close. Taken. You getting any stock, Mayur? No, right? So maybe there's no stock within this particular thing what we are looking, right? So the idea which I was telling you is basically you can add latest close within certain range, then latest close with the previous tick, previous minus 2 tick within certain range, latest close within previous minus 3 tick within certain range, and so on and so forth when you continue, right? That means the close price is within a certain range from last 1, 2, 3, 4, 5, 6, 7, 8 ticks. So that will give you some sort of consolidation. It requires a little bit of this thing, some sort of work and some sort of basically the chance to find certain stocks within that limit, right? So there are no stocks which are matching this particular criteria, right? So maybe we can see it on a different time frame, right? Swapnil, we used the tick, so tick was not the issue, right? I used between. Okay. Okay, let's see between. Between close between 1 to 3%. Okay, some stocks are coming, right? So latest stock close is between this thing. Then we add another one. Thanks, Nitin. You mentioned, right? Then P minus 2 close, right? Between 1 to 3%. Then add another one, latest close, P minus 3, close with 1 to 3%, right? This is how you can create your queries. I hope we get some results. So 3 results we got, right? So it is in that range. All the 3 are within a range. We just use 3 candles, right? That's why it is we are able to find. You keep on adding more and more candles out here. There's no limit to number of candles that you can add, and that would probably give you the consolidation area, right? This was important. That's why I came back on this thing again, right? This is how you play with this. It's very, very powerful, right? Will help you to give you a lot of things, right? What are the stocks which are about to break out? We have seen, right? So basically, 2 things that you can look at. Again, this is important. That's why I'm giving you a little more emphasis on this, right? So when you look at basically the screeners, let's go into candlestick patterns, or maybe in this thing, right? So one is basically a channel, right? So what this gives you is where the breakout has happened. Where the breakout has happened, okay. Medium term, nothing. Breakdown. Wow. Okay, one stock where the breakdown has happened, right? So when you see the rectangle part is broken down, right? The breakdown has happened. Now, if you are looking for something which is a possibility of breaking down, right, or breaking out, so basically what you should be looking at is potential patterns, right, where the possibility of it is breaking is there. So it is still in the range, and it is very near either support or resistance level, right? So when you look at this one, right, it is at a very, very edge level, right? You'll see that it is at the edge level, right? So when you look at these things, this is where the possibility of it breaking down is there, right? So it is more like a potential this thing. And then when you see there are a few other things which you should also look at, but the potential breakdown is something which you can look at, right? So what you should be looking at is the real breakout or breakdown. We couldn't get any, unfortunately, on a daily. Let's say on a weekly. Weekly we got National Aluminium, right? When you look at this, so it has breached that particular level. Maybe you look at long term. No, nothing is coming. Not too many. Short term is only coming. Or breakdown, we see only Bata India. Bata India is another example, right, where it has breached that level, right? So this will be a good starting point for you to look filter out the stocks, right? Bata India is there. There's only one stock we could get. I hope that answers your question. This is one way. The other way you guys remember, we did this thing, trending channel breakdown, right? So this is where the trend is breaking, right? This is where the trend is breaking. And same way you can also look at various trend line indicators or screeners, right? Trend line, falling, support level breaking down, right? So you look at this one, right? So it was at a support level and then it has gone down, right? It's a very small pattern, so not too good a pattern. Medium term, right? So it was this was the level, right? It has clearly gone below that level. Okay, so this is how you'll typically find these things. So there are a lot of different ways of getting it, right? The idea is always stick to what you understand, stick to what gives you consistent results, right? Different ways of looking at. Try too many things, that defeats the idea of price action. Price action is supposed to be very, very simple to use. Okay, so price action engulfing, right? Bullish price action engulfing and bearish. Remember guys, what we saw here in this particular example is engulfing of a candle, right? So this is good, right? But how can we make it even better, right? How can we make it even better is basically engulfing of price range rather than price, right? For example, this is where a bullish engulfing has happened. Not only engulf 1, but 2, 3, 4, 5, 6, and maybe many more, right? 5, 6. Now, once such a engulfing happens, right, it is likely to give you better results, right? Single engulfing may give you good results, right? But this increases the possibility, and such an engulfing can happen. Such an engulfing can happen only when it is in a consolidation range or in a sideways market, right? So very important to know or to note. Right, very important to note, right? How do we create these things? How do we create this pattern, right? Now this is something which is, you'll never know that how many candles you should be looking. So some people may are happy with one candle, some maybe with two candles. So depending on what you feel comfortable, right? You can create one. Now go here, again go to DIY screener, do it yourself, right? The tool, right? Latest body close is above latest open, right? By at least put it at 2%, right? So that what we get is a white candle, white green candle, a white green candle, right? That's the first criteria. Okay, white green candle. Then the next one is, what you should be doing is, you should be looking at latest close is above P minus 2 high. Okay, so what we are trying to do is, from one place we found the rightmost candle. Now the rightmost candle should have a range of higher and lower compared to last many ticks. So that's another one. Add latest day close below previous day low, right? So when we look at this candle, right, okay, unfortunately no results. Okay, okay, we change the direction, right? We go into more of a reversal thing. Latest day close below late. Okay, so we have to redo things, right? Maybe okay, let's keep it, let's see if we can find it in another time frame, right? Nope. Okay, so let's reset and try to do exactly reverse of that, right? Latest day close is below latest day open, okay, by at least, let's say 2%, right? 2% is a pretty wide range. We'll see, we get few stocks, right? A wide range stock, right? Okay, so that being one. The second one is again add, where latest day close is below previous day low. Okay, run. So what it tells you is, latest day is below this, right? So this is where sort of engulfing is coming, but since this is relatively, right, this is relatively difficult pattern to find, right? You may not have too many such occurrence. If this was slightly wider, if it was it had opened slightly lower than this and slightly closed slightly, or opened slightly here, over here and closed here, this would have engulfed last many candles, right? This would have engulfed last many candles and you would have got good results. Now this being a very rare pattern, right, you will not get, first of all, engulfing itself is a rare pattern, then you are trying to engulf multiple different candles, it's all the more difficult. But once you find it, it's likely to give you very good results, right? Likely to give you very good results. Like this is an example where it is engulfing last many candles. You can play with this. It'll take some time for you to play. If you need any help, one of our colleagues will come and help you in the one-on-one session, right? Similarly, there was an engulfing out here, right? Cholamandalam, pretty recent times, right? And then it has given you a very downward movement, right? So it requires certain practice to use the tool, to understand the concepts. Once you understand the concept, it's likely to give you very good results, right? You can reap benefit of the hard work that you have done to understand the concepts. Any questions on this bearish and this thing, engulfing, price action engulfing? right? Let me see if team has found out any example other than these, right? No, we don't have. Engulfing is a relatively, this kind of engulfing is a slightly a rare pattern, right? So you may not get it every time that you are looking at, but when you get it, you should make best use of it, right? Now price action patterns, some of you have mentioned about the price action patterns, right? Again, I'll be very upfront and open. We'll be covering only certain patterns. Somebody mentioned Tweezer in the morning, right? Somebody mentioned head and shoulder. We'll cover very few of them in this session, and we'll have another session which is a lot more detailed in the subsequent sessions. Right? Don't want to eat all your time of your weekend, right, in one single session just for this thing, right? So, and also there'll be opportunity for you to start brushing up or using the tools to take the best advantage of it, right? So first is the pin bar candle, Tweezer, double bottom, head and shoulder, ascending triangle pattern are some of the patterns that we have tried to cover in this session, right? What is pin bar? Pin bar is a candle where the body is very small and the tail is pretty long, right? Depending on where it is formed, right? Some of the examples which team has got up is hammer, inverted hammer, dragonfly doji, right? So looking at some of the examples that we have going out here, do we have hammer out here, right? This is pin bar, right? Inverted hammer, right? So if you find this kind of a structure where the body is very small and it has a long tail, right? Tail or wick, some people call it as wick, tail, right? That is pin bar, right? What it tells you is basically there was an attempt to move in that direction, but the attempt failed, right? It started here, right? There was an attempt to bring it down to a very large level, but attempt failed, right? So it gives you a lot of signal on where it is formed, right? So we'll get into here, pin bar candle, hammer, inverted hammer. We'll see certain examples. Now, where should you be looking at? Some of the examples, you remember in the morning session, we tried to spot some of these things, right? So this is where a pin bar is formed, right, at real end, right? So it was in a downtrend movement. It tried to go in the same direction. It opened somewhere here. It tried to move in that direction, but somehow it couldn't sustain and it bounced back. And then once this is there, then the second bar. Now, depending on your aggressiveness, you can immediately get in there around 315, 310. If you are an aggressive player, you're doing on a daily tick, looking at it, you can directly get here, or slightly less conservative players can get in here. Okay, it is still intact. Remember, the primary trend is downtrend, right? So playing against the trend without a proper signal adds risk. So this is where you have to look for confirmation. If you are aggressive, you can directly get in the morning tick itself, right? And placing a stop loss somewhere much below this level, right? Much below this level, about a percentage or two, depending on the stock movement, you can put a stop loss and you can get in there, right? So limit your loss, ride on the profit, right? That's a key mantra we have been talking throughout these sessions. Okay, this is pin bar. So basically what it tells you is it's a swing rejection. It is going in a particular direction trend and then it's rejecting, right? It did try on this particular day also. It tried to go in the direction of the trend but couldn't sustain, and then it closed somewhere here, right? So which tells that which way the wind is blowing, right? Bears are slightly losing the grip. They came very aggressively, but they have lost the grip, right? Again, could be certain news-based things or whatever. I don't know, right? Or for this example, another example, it happened on the top, right? It's an uptrend. It tried to go up all the way up here, couldn't sustain, came down, right? Entry point can be somewhere around, if you are doing on a daily tick, right? 315, 310 for very aggressive traders, provided stop loss is there, or slightly conservative can come here, right? Can come here or wait for this entire candle to form, right? Entire candle to form, and then maybe it started somewhere around here. It went up towards the end of the day. It's coming here, and then you can ride on this wave. Okay. This is evening star pattern. Yes, sir, it is, right? Sort of morning star, right? Which setting are you looking at, Nagaraju? I see you have asked a question. You want to see the settings. Right? Be little more elaborative because a lot of times, you know, there could be a lag between what I'm talking and what you are writing over there. And also with the flow, I may miss some of the questions, right? I try to do justice to all the questions, but sometimes I miss out. So just be little more elaborative, not like a paragraph kind of thing, but little more elaborative will be good, right? So when you say settings, settings for what will be more helpful, right? So these are swing rejection pin bar, right? Now pin bar is something uh, you can directly get, you can directly get in this screener, chart pattern screener. Go to bullish, right? Hammer at downtrend. Okay, as expected, it's a pretty rare pattern, right? All right, let's see in all kinds. P minus 2, P minus 3. Okay, slightly rare pattern, right? This one is slightly a rare pattern. Maybe we want to skip this. We just go into one tick pattern. Just look at this pattern or this pattern. You'll find few occurrence of this on the latest tick. I hope so. Okay, so there are few occurrence, right? Number one is this one is hammer, right? Hammer pattern. Hammer pattern is formed out here, right? Of course, it's not at downtrend, right? Downtrend will give you better things, but still this has a lot of meaning. The trend is downwards, right? It tried to bring it down, but somehow there were some fresh buying which didn't let it to fall to a next level, right? So again, it has less significance because the place where it is formed, this thing, right? This one again much lesser significant, but the pattern is definitely formed, right? So these are typically pin bar patterns that you will see. Depending on where it is formed, it has a different meaning, right? So basically look at this. What a single bar tells you is that it's in downtrend. You see a lot of black crows coming here, right? Bloodbath, red, 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 red. It tried to go down, couldn't go down, and again there was some sort of buying interest which didn't let it down, and in fact it gone above the previous candle, right? Above the previous candle, so mildly bullish, right? But looking at these stocks, these are not very high qualities. I mean, sorry, I'll take back. Not highly. When I say high qualities, like trading in volume perspective, right? So when we look at this thing, NSE 500, Phenolex is one example where we got, right? So this is a proper tweezer, right? Sorry, a pin bar, right? Which you should be looking at this thing, right? Another one is this one, right? At the bottom, it came down and then again bull took it. So there's a possibility of movement up here, right? Lesser significance for this one. This could be an exhaustion of this particular mild trend kind of a thing, right? Can't say very clearly. This one, had it been formed somewhere around this place, this would have given a lot better signals, right? So look at it, you'll gradually get familiar with this and use these kind of tools to get it. Now, how can you make these things? So there are certain things which are pre-built for you, certain things which you can build on top of it. So if you were to build this thing, right, on an NSE 500, let's see if we can build thing where candle body range is below 10% of HL range, right? So what this will find is, first thing is candle body is smaller, right, compared to the overall, right? That is first. Then second condition, what you can do is you can add another condition out here wherein so this one is candle body we have done, right? So if you're looking at green one, then the close is above latest. Okay, sorry, I did messed up here. Okay, let me pause the second one, right? So, right? Okay, right? So the first condition is met. Will restrict to NSE 500. Okay, we are there, right? The second condition is latest close is greater than latest latest close is greater than latest open to give you green candle, right? So it's giving you green candle. Sorry. Are we looking latest tick? Latest close is greater than latest close is, sorry for that, just give me one. Okay, sorry, I hit that, right? So what I did is, in order to test that, right, what I did is I disabled the second filter. This is how you can enable disable during your testing, right? I enabled it back. So let's run it, right? You will get green candles, right? Now the third criteria is, if you are looking this thing at near bottom, right? So what you can do is go to high lows, new highs lows, maybe last 15-day low made in the 0 tick, right? In the latest tick. So okay, no records, 15 years, sorry, 15 days low, right? You find this thing. So what we are gradually building is basically the pattern which we are interested in, also the green pattern, and also it is at a lower level, right? So this is how you will typically do it, right? The fourth thing is, if you want to have this open very close to the high, right? So what you can do is, you can further add condition, right? Latest close between 0.1 to 0.5% of high, right? So first condition was like a very small body, long wicks. The second condition is green candle. Third condition is the close, right? It should be more like a hammer at a downtrend. So when you look at this, what you have found is a proper, this thing almost like a hammer at downtrend, right? You can reduce this thing. So 0.5 is pretty large. So let's reduce it to 0.2 to see if we get anything, right? You find LNT Mindtree, right? So this is where it is, almost at a downtrend, this thing is formed, right? So gradually you can fine tune your strategies, right? Yeah, thanks Swapnil. I just noticed that the second condition was paused, right? So this is how you can incrementally create these kind of patterns by yourself, right? May look little overwhelming, but once you start using it, little practice, the kind of results that you can get is pretty amazing, right? So that was about a pin bar. Pin bar, what it tells is body is very small. Body is very small. The range is long. That means something is about to happen. Generally, that is the general this thing, right? Price engulfing settings. Okay, let's try to do that, right? Price engulfing. First of all, there's a ready-made pattern. If you want to use this pattern, you can use it. But this is based on a standard formula, right? If you have a magic formula, better than that. So first thing is, latest day close should be above latest day open. Okay, this will give you green candle. Also, let's put 2% so that the candle is wide. So the quality of engulfing is better, right? So is a green candle, which is a wide green candle. Okay, that is the first criteria. The second criteria is, what you can do is, you can add latest day body range is greater than previous day body range. Okay, so we got 26. This will reduce the number of things to 23, right? So what we have done is, first this thing and the body range. Now third is, it has to be within this, right? So keep on incrementally adding the criteria, you'll be able to get engulfing. Do you want me to create that here or here? Good, Nagaraju? right? Similarly, you can keep on adding the criteria, right? So latest day close is above uh, previous day open, right? And latest day close is above previous day close, right? So adding more conditions. Keep on adding conditions. It's very simple, right? It's very simple, right? So we have added more conditions. Now we want is latest day body, latest day open below previous day close, and latest day open below previous day open, right? So this will typically form a good engulfing, right? So the advantage of using this, Nagaraju and team, right, is basically you can define your own length of the candle, right? Also, if you want to add volume along with this, feel free to add volume to see the conviction. You can also see that where it is formed. Is it formed in the downtrend or uptrend? So anything which is here, right? A lot of these things, pre-screened stuff. This tool will give you the flexibility of creating your own chart patterns, right? We will always have a limitation of giving you 5, 10, 15, 20, 30, 40, 50 or a finite number of patterns, right? Whereas what you can do with this tool is you can create any pattern that you can even hear, think, read, or even you can come up with your own patterns, right? A lot of powerful patterns can be made with this. Right? So pin bar we covered, right? The next one is Tweezer, right? It's again a reversal pattern, right? Towards so basically a reversal strategy. You can use a top. If it is top, it is bearish. If it is bottom, it is bullish. Let's try to understand what Tweezer is. Tweezer is when there are two candles of opposite direction. The first candle, a white candle in the direction of trend, and then almost equivalent size of a candle which is opposite color, right? So if it is uptrend, the second candle has to be a red candle, and then once such pattern is formed, right, it generally tells you that the rally is getting exhausted, right? If the rally is getting exhausted, then if the rally is getting exhausted, then obviously there's a possibility of a downtrend, and which in this case it has happened, right? The second example of Tweezer is a strong downward movements, long white red candle, and then followed by a wide green candle, and then direction changed, right? Whatever was the reason, whatever was a small reason out here, right? The reason got eventually resolved, right? And it's again going back into the at least the parent trend direction or the parent level, right? So these are again a very good thing to spot, right? Tweezer. Can you plot Tweezer? Yes. We'll take a small example of how to plot this Tweezer, right? First of all, the latest candle body, right? So we are looking at bearish one first, okay? So the previous candle close is greater than open. That means in the previous candle it is a green bar, a pretty wide green bar. You can put 2% or maybe 3%, right? Let's keep it 2 to be a little conservative to see if we can get any example. So the first example that we get is, right? So the previous candle is a white candle, okay? That's number one. The second candle followed by this is a green candle. So previous close is lower than previous open by 2%, right? So what we are doing is we are adding back to back 2 candles. Oops, no record. Again, it's a rare pattern, right? So not very easy to get in the real world. But when you get it, it's powerful. Previous, oh, sorry, my fault. This should be latest, my faults. Okay, so we got 2 bars. The latest the latest is, now this is sort of forming, right? It's an uptrend. You have a green bar, white bar, almost equivalent size of a bar, red bar out here next to each other. That means, and it's also happening near the top, right? So this is a possible tweezer. This is again another example of it, right? This is another example. This is third example, right? So when such patterns are formed, right, your eye should open up and look at it, particularly when it is at a certain important levels, right? This is a good level, right? This is not so good because it's just next to each other. Now, how do we make it good? So what you do is basically to see whether it is in the top, right? So go to high lows, go to new high lows, maybe 10 days high, right, made in the 0 tick. So this one looks like a better one, better candidate, right? Purely from the theoretical perspective. So it has gone up. Again, this equivalent of this thing here. Okay. Another condition. So the conditions that we have added, 3 conditions. One is this candle, previous candle, latest candle, and the high lows comparison, right? The 3 conditions we have added. Now the fourth condition, what you could add over here. Fourth condition, what you can add over here is latest open is between 0.1 to 0.25%. 25% latest open is between previous close. Remember, previous was a green candle, so the latest was red, right? So if you see here, this should be almost near level, right? This should be almost at a near level. So that's the condition we are trying to do. Okay, no stocks. Maybe it's a little too stringent. Latest candle. Okay, maybe we go into another tick, see if we can get something interesting. Right? Why it works better with weekly, right? Why it works better with weekly? So when we do weekly, right? You remember one of the conditions that we did was day comparison, right? So that is why it is not at the top. In such case, what you need to do is you need to change it to week. But the idea which I'm trying to tell you, I hope you understand that idea, right? Is the candlesticks within, they should be within certain range. Okay. Now, let's see if we change this to 10 weeks to see if we get anything. First candle. Yeah. So RBL Bank. Right? When you look at the RBL Bank, this is where it is happening. But remember, guys, 0.12% is very small when you compare with weekly. In week, the movements are much bigger, right? The percentage that we selected earlier, was for day period, right? For day period. Now what we have selected is week. So in a week, 1-2% is minimal, right? In 15 minutes, it's very huge, right? So again, looking back at this one and see if we can fine tune this stuff. Instead of week, go back to days and we take it to 0. Let's see if we get anything. No, we can't get anything, right? Even in all stocks, we could get few, right? So this is where the tweezer is getting formed, almost at a high level, right? Almost at a recent high levels, right? It's not like significantly high, but at a recent high levels. So this is how you'll find it. 2 things are important, right? 2 things are important. Number 1 is understanding this thing. Number 2 is able to spot. Number 3 is able to create these things, right? If you guys feel that we should create few for you, then we'll be happy to create, right? We'll create something and publish it for the premium users, right? We could do that. So mention over there, right? So, but the best is the more you work hard, right? The better understanding of the pattern is, better your ability to spot these things, and obviously with that, the better results or returns. Okay. So this was tweezer. Second is chart pattern. We'll very briefly touch chart patterns over here, right? As we have a full-fledged session on it, and also we are almost nearing the end, right? Double bottom pattern and head and shoulder pattern. Now this is a typical double bottom pattern, right, where the price is coming is in a downtrend, trying to go down. We are completely in control over here. Somehow there's a minor retracement, right? Bulls come in, can't take it further. Again it comes down, right? Again it comes down. Then again bulls get in there, and this time they not only take it up to back that level but also beyond that level. Okay, so this is typical double bottom. Now where do you find double bottom? Go out here, go to chart pattern screener, common structural patterns, double bottom. You'll find quite a few double bottom on NSE 500. Let's see. So we find two stocks. One is National Aluminium, right, coming down, going up, and then it's going up again, right? Or this ICICI Lombard, right? Again, it's coming down, going up, and then it has likely to go upwards. Okay, this is one. The second thing is generally because of the knowledge that everybody has, right? People simply come and get into that thing much faster, right? So what we have is a potential double bottom pattern. Let me take it for a long term, where the double bottom is not formed yet, but is likely to form. So when you look at this, the pattern, unless this level is crossed, the pattern, theoretical pattern has not formed. Now, if you are one of those guys who want to be early rider, then can set an alert. If it goes above this point, you want to buy it, right? So this will also help you to find that where the potential patterns are, right? So this is a very long-term pattern. It's come here, gone up. This might look even better on, okay, this is weekly chart, right? Maybe on a monthly chart, it will look a lot better, right? Of course, double bottom, right? Or on a daily chart, right? On a daily chart, it'll appear like this, right? Or on a weekly chart, it looks better, right? So also try to play with different, different ticks. For example, long term, right? You'll find quite a few double bottom potential patterns out here, right? So these are likely to make double bottom. Okay, so make best use of it, right? Similar to this, there's another pattern which is head and shoulder pattern. Somebody mentioned out here, long term, Samvarthana Modisan, right? So head and shoulder pattern, what it is, I'll give you a very simple example of how that particular pattern looks like. Reverse head and shoulder. What happens in this pattern, right, is the price is coming down, it hit at a level, retraced, then the second time it hit at a lower level, right, this level, retraced back, again hit it at a much deeper level. So the key important points, right, is point 1, retraced, again it came down to a level below this level, retraced, second time it again came down, but came down to almost at the same level as the previous low, right, and then retraced back. That means bears were in control, bulls tried to take it up, bears said that nothing doing, we are the boss, we come down, right? Then again they cannot sustain, bulls come in, but again there's sort of a supply and demand dynamics working, cannot go up, tries to come down, again bull says no, we want to be back in the game, right? Come here. So these two levels are almost same, right? These two levels are almost same, and this one is deeper than these two levels, right? So when you look at head and shoulder, right, why it is called head and shoulder? This is head, these are two shoulders of human body. I don't know how exactly that is, but that doesn't really appear, but this is the closest or this is the reason why this particular name is given to this. Okay, now this level where it is retracing multiple times is called neckline. This is head, these are two shoulders, right? So once this pattern is formed, it's pretty reliable pattern, right? Look at all the other aspects, and then you can make a good profitable trade out of it, right? Somebody mentioned they want to see Coal India, right? On a Coal India, right? So this is let me go from this one, otherwise the points are, sorry, head and shoulder, right, medium term, Coal India, when we look at Coal India, right? So basically, this is the first shoulder, came down, right? Again, it tried to go up, couldn't go up. Again, it came down almost as this level. So in theory, you will see the perfect pattern, right? In real world, you will see some variations of it. Again, it tried to go up, right? The second shoulder is here and it came down, right? This is one example. The second example, see in medium term, no. We see reverse head and shoulder, that is much more bullish pattern, right? So Rain India, you see, not a great example. Let me see, take it to a slightly medium term if we see anything, right? Adani Transmission, right? Came here, went up, came down, went up, came down, and again going up, right? This one is slightly better. You can see those movements much better, right? You can see the movement, first low, second low is lower low, then the third low is somewhere near this level, and then it can go up from here, right? So this is typically a head and shoulder pattern. It requires certain practice to spot them. They appear pretty often. Mayur, can you look at this laptop, please? Right? They are pretty common. They are pretty common, and then right, they are pretty and this tool will also help you to filter out the stocks, right? Head and shoulder pattern. Similarly, there are quite a few patterns. Somebody mentioned Heikin-Ashi, candlestick, narrow range, wide range, CPR. We'll be covering all these things in subsequent sessions. So depending on the kind of basically interest that you guys show in terms of getting into the session, or basically the liking or spreading this, we'll have the right level of motivation, and we'll take those sessions as much as we can, or as much as we know, right? That is the key, how much we know, right? So another example of head and shoulder, first shoulder, head higher than this level, second shoulder almost at the same level, and then it actually came down, right? So these are the direction, right? Now, similar to what we do, there are a lot of other players also working on these things, right? I mean, so basically, sometimes these patterns can be slightly manipulated, maybe like a bull trap or a bear trap. So keep stop losses, right? As I've always mentioned in the sessions, right? In this particular case, it did tries to retrace to the original neckline, right? This would be a good stop loss, right? So its stop loss is not breached, and still this level is on the downtrend side on this one, okay? Okay. So triangle pattern, again another this thing, geometry symbol, right? So what this is ascending triangle. What it tells you is that there's a strong resistance continuously built up, right? Whereas on the bottom side, it is making higher lows, right? It is making higher lows in such a way that a trend line can be drawn, right? This is a horizontal trend line. This is a rising trend line. Once such a breakout happens, and if this breakout happens and the original movement is uptrend, then it's likely to give you better results, right? So in this example, we see that the breakout has happened and it has given a very good results. Where do you find this pattern? Go to triangle, go to ascending triangle, maybe long term. You'll find that there'll be few things, right? So upper level is there, almost like flattish, and this level is going up, right? So if we were to draw a trend line, somewhere around this, right? Somewhere around this level. So this is where the ascending triangle, the top is pretty much static, whereas it is making higher lows, right? So once this breaches, it's likely to give you good results, right? Again, this is another example, higher being in a very close range and lower is going up, right? So if it breaches this level, it's likely to go up, right? Another example, this level is pretty much static, the upward level, the lower level is, or the lows are making higher lows, right? So this will be a typical this thing, okay? Next one is open range breakout. Before I go to open range breakout, let's see if there's any question, comment. Can there be multiple shoulders? Yes. Yes, Tarun, there can be multiple shoulders, and would appreciate if you use a smaller case. All uppercase doesn't look very nice, right? I hope you understand, right? You can have multiple, so you can have multiple variations of head and shoulder, right? They can be two shoulder on left, one shoulder on right, or two shoulder on right, one shoulder on left, right? There can be multiple variation of it. Can we get ready-made candlestick patterns? Yes, the patterns are available out here, Nagaraju. Right? The patterns are very much available out here. Candlestick patterns are here, right? You'll get all the important patterns out here, number one. Number two, you go to DIY screeners, you can mix and match. The reason why I took you to those OHLC is for the reason why I took you to OHLC is because these are fixed formula based, right? Fixed formula based, the best formula which or some of the theoretical formula. But if you are a pro, you want to break the barriers, obviously the people who break the barriers are the big winners, right? So you can use these ready-made patterns also, right? Any of these patterns, you can filter on the multiple patterns together with this, okay? So that answers your question. Can this tool be used for option trading? Option trading is very limited. I'll be very honest, it's EOD, right? So first of all, this is not a trading platform. Mayur, can you have a look? Okay, so this tool, okay, so this tool is, so it is for intraday. First of all, it is not a trading platform, right? Not a trading platform. So you cannot trade on this platform. All that you can do is you can do mock trading, and we strongly support you to do mock trading with the portfolios and the back testing and so on and so forth. That's number one. Number two, as far as option is concerned, it's EOD only, right? So if it helps, if this EOD option helps you, right? It's a powerful one. We try to cover quite a few things on this one. So we have all the standard open interest, high lows, short covering, basically all these kind of things are there. And on the individual stock, let's say we go into Nifty index, right? When you look at the Nifty index, there are quite a few things. Again, slight deviation from the mainstream, but I thought of just mentioning out here, right? So in the Nifty index, you'll get all those close expiry dates, open interest, contract change, stuff like that. Call options. In the call options, you'll have the each data point. You'll have the interpretation. You will also get PCR, right? Put call ratios out here. You will also get the Greeks, delta, gamma, rho, vega, theta. I'll not get into any of these things because that's far beyond the scope of this thing, right? So you do have certain filters wherein if you are looking at PCR ratio, high PCR ratio on the near month, you'll find all these stocks with having higher PCR ratios or things like that. So it's end of the day, right? So can you trade in this platform? The answer is no. Are we looking to be a trading platform? Again, the answer is no. The best we are looking to do, we are in discussion with a few brokerage firms wherein you can initiate trade from this platform, but the trading actually happens from your broker, right? For example, we go into the new gen broker, right? I'm just making it up, right? You have an account with new gen broker. Then you say that, when you're looking at this thing, maybe a better example would be this one, right? Looking at this is where it goes into mock trading. Over here, we'll give you an option of trade with your platform, right? So this is adding to your portfolio locally. This is the place. If that were to happen, no commitment on that. There are multiple things, not only the technical aspects, there are a few other aspects also which we need to look at before we integrate with the trading platform to keep your best interest, right? That is the key. That is the key, right? So once you are there, a trade with next gen brokerage firm, click here, and then whatever buy price, quantity, trade, stop loss, all these things will provide over here, and then you can trade it. Okay, so slight deviation. over there. Any other question? Can we get ready-made candlestick? Yes, we covered that, right? Open range breakout, right? 15 minutes range breakout, 30 minutes range breakout, right? What this is, let's try to understand with an example, right? So for first 15 days of this trading day, this thing, right? This particular candle was in a particular range, right? These are three different candles, 5 minutes candle, which will make a 15-minute candle, right? Once this level is breached at any point in the day, it's considered as a bullish signal, right? It's considered as a bullish signal. So what you can do is you can use the screeners to find such patterns, right? Will I be able to give you real world example? No, because this can be seen only during the market hours, right? Post market hours, it's very difficult to spot. First of all, this itself is a rare thing and it's very difficult to spot. So during market hours, what you should be looking at is 15-minute tick. Even better is if all these other ticks are within this range, right? If all these ticks are within this range, then whichever direction it goes, up or down, there's some good interesting things are there, right? But in this particular example, what we are looking at is basically 15 minutes range, which was not breached throughout the day or for next couple of hours. And when it breached, it gave you a powerful signal, right? It gives you a powerful signal. So that's an opening range breakout. You can look at 15 minutes period, you can look at a 30 minutes period. This is an opening range breakdown. Once this range was broken down, right? It did break out here, right? It did break out but didn't sustain. So false breakout is a quick example of this. Once it broke down, it gave you a pretty good thing, right? How do we find this thing in TSR screener? Go to DIY screener. Go to DIY screener. You have an option of range breakout breakdown. So initial 15 minutes breakout, if you are looking at on a candle body or on H high-low range, you can look at anything, right? Breakout is one thing where it has broken. The second thing is breakout. The meaning of a breakout, right, will be best. Meaning of breakout would be best when it is after certain candles, right? So in the example that we saw out here, if it is happening after certain candles, right, then it has a better meaning. So what you can do out here is basically breakout after staying in the range for at least 3 to let's say 8 candles, right? So breakout is happening on a 15 minutes. So first 15 minutes. So between 9:15 to 9:30 is the candle. What is it breaking out of? In last 5 to 8 5 minutes candle, right? Slightly difficult, but once you get used to it, right? So first 15 minutes is the range, and then breaking on any of the 5 minutes, 3 to 8 candles, right? When you look at it, obviously the results will not come because it has already happened, right? It has already happened. Maybe just for trying it out on a 30 minutes candle, maybe we'll get some results. Okay, there are few results, right? So when you look at this thing, so our base candle is 2 hours, right? And then the second candle is 30 minutes candle. So what we should be doing is we should be changing it to 30 minutes on a day tick. Okay, somehow it doesn't like that. So market started on 13th, right? Market started on 13th, and then subsequent breakout happened around this point, right? Happened around this point where this actually gave a breakout. Not a very good example because 30 minutes is not the best way. Let's see another one. Also not a great example. So I'm telling you, this you will get in the real market, lots and lots of these things you will be getting, and these are powerful signals, right? So how can you make best use of it? Is you set a period, ideally 30 minutes breakout or 15 minutes breakout is a good thing. You keep it on 5 minutes and you should keep it. You can look for a breakout or breakout and sustaining, right? This perhaps will be able to get it. Sustaining for maximum, let's say 10 ticks. I hope we'll be able to get something over here. No. We make it 1 hour. No, we don't get it, right? So the key here is Mayur, can you get to, right? So basically the key here is to be able to understand that your first 15 minutes, right? First 15 minutes range or first 30 minutes range is getting either going above that range or going below that range, right? Depending on what it is, right? So same thing we have tried to convert, right? Same thing we have tried to convert in a very simple and easy screener, right? Now, can we create a tool for this or a fixed set? The answer perhaps is no. The answer is no. The reason is because different individuals have a different kind of requirements, right? Some will feel that 1 hour, somebody will feel 30 minutes, somebody will feel that it is breaking out and sustaining. So breaking out and sustaining is a good thing, right? If it has broken out and it is sustaining, it's a good thing. Okay. So any questions on this range breakout? Range breakout ready screener, Swapnil, as I mentioned, right? Or Karan, right? Basically, it is something which you have to customize, right? Depending on your need, right? Depending on the customize, different people have different things. But what it helps you is basically with minimal steps, you'll be able to create one such screener, right? What I would suggest is first 15 minutes is a good one, right? Typically this will help, right? Arif will jump there, right? This will help first 15 minutes and the breakout will be on a minute, right? That will give you better results, right? That's the best thing. And Arif has been mentioning about the 1 minute tick, right? So that will give 1 minute tick, but 15 minutes or 30 minutes tell you that where that particular thing was at an initial level and where it is breaking out, breaking down, or breaking out and sustaining, right? So in the examples that we have is not only the breakout breakdowns but also sustaining beyond that level, right? So those are certain filters that you can apply for this kind of things, okay? For this strategy. To show real world example, not live one though. Real world example, yeah, we have this real world example, right? These are all pretty recent ones which team has brought up, right? This one again is 20th December, so pretty recent period, right? Pretty recent period where this has happened and it has given a good move. I hope this helps you. Is there a 52-week breakout screen? Are you, Mehul, are you looking at new 52-week high? Okay, good. I think there's a lag, so we'll have to bear with some lag. A real world example. 52-week high, we have two different ways of doing. Number one is basically if you're looking at new intraday high, right? So instead of 52 weeks, what we do is we take it to a year, right? New 1 year high is made on that particular day, trading day, number one. And number two is where we go wrong, right? Where we go wrong is we just see the high level, right? It has made a new 52-week high. Let's see if there's any 52-week high. Low has a better possibility. No, right? So what it tells you is a new 52-week or 1 year high. 1 year is almost like 52 weeks, right? So it has made a new intraday 52-week high, number one, and it is still above the previous 52-week high level, right? So this is where the screener is. Let's see if we can get something over here. 1 year high made in the zero tick, right? So these are the stocks which has made a new 1 year high. So when you look at the 1 year high chart, right? So these stocks have made new 1 year high, right? So all these stocks have made new 1 year high, right? So this is again a good pattern, right? What you will be looking at. Second thing is new high low range, right? So 1 year high has made, if it is yesterday, still it is very positive, right? So new 1 year high made yesterday. What you can look as it has made on that day or on a specific tick, or within certain ticks. So this will filter you all the stocks which has made new 1 year high in last 3 ticks. So you see there are 5 examples here. We should be getting little more than that, I hope. Right, 6 examples, right? So you got an additional stock which made 1 year high either today, yesterday, or day before yesterday. Right? Yeah, this one has made day before yesterday, right? New. So you'll not only be able to find the latest high lows, so it's not restricted to 1 year. You can change it to other periods also, right? You can change it to other periods also of basically minutes and other things. Third thing, what you can be looking at is new high-low range. We have seen it, right? Within a range. Historical high lows. Now, is the stock near 1% of its 1 year or 1 year high? You'll get the stocks which are near 1% of 1 year high, right? So, so stocks which are like this stocks, right? It is ready to roar. So when we look at a slightly longer, shorter period, right? You look at this, so it has, so the trend is very good. It has made a recent 1 year high, trying to consolidate. If it breaks above this level, it is even more bullish signal. Okay. So these are all part of price action. That's why even I deviated on this 1 year high or low, right? In some of the areas where I didn't. So you have multiple different things. It's just that familiarity with the platform. Number one, thanks Mehul for mentioning that. I hope that you make best use of it, sir. That's one. Second thing is understanding the concept, right? Price action is simple. Price action is simple, yet very subjective, right? So gain mastery over it, you'll gain a lot of things, right? Opening range breakout, breakdown, we have done it. Range breakout, right? Again, a very important one. Even though we are slightly behind the schedule, I think it's worth it of taking time to understand this, right? So in the OHLC or in the price, we have a breakout and breakdown, right? What it tells you is that latest close is breaking out of 20 candles, right? Last 20 candles. So let's run it, right? So latest close is higher than last 20 candles, okay? So when you look at this, right? Now this is not a typical breakout, right? Or maybe I'll give another example, right? It is above this, not a great thing, right? Not above this is a great thing, right? So you should have a gap of this versus the previous 20-year high with certain gap, then it makes better sense. So what you can do for that is basically with latest value candle away. So latest or the previous high should be away for at least 5 candles, right? Now let's see from this 34 results, how many results we get. We get results of 10, right? Now the previous high was at least 5 candles away from it, right? So when you look at this, right, was at least 5 candles away from this. What we are looking is close, right? Similarly, what you can do is in case of breakout, instead of close, you can also look for highs, right? Highs can give you better results, but keeping it conservative, doing it close, right? So it is breaking out of last 20 close. So last 20 close was here, right? It is breaking above that particular level, close. You can change it to OHLC, whichever you feel more comfortable at, right? Some of the candlestick experts will prefer to use other parameters than close, right? Go ahead and do it, right? This is again breaking out of this range, right? Second, another basically thing that you can look for is if it is sideways, right, and slightly above the last 20 candles, doesn't make sense. So it should at least retrace by 10%. So that a proper V-shape recovery is there, right, or near V-shape recovery or a U-shape recovery, whichever recovery is, right. So instead of 10 results, we should be getting slightly lesser results, but better quality ones, right. So we get 3 Adani transmission. So what we see is there's a in last 20 ticks, it has actually gone down and then going up and breaking that level, right. Some people will find a pattern out here. I'll leave it to you guys to imagine that pattern which is getting formed out here, right. Over here also, it is breaking that level, last 20 level, and it has come down actually. Feel free to add volume. So what it does is, it will not find the last high, but what it will find is last 20 ticks, right. You can change it to last 40 ticks, right? You can change it to last 40 ticks also. It should give you results, right? One result is there, right? So this one is better, right? So the more the period that you do, right? The more the period that you do, the better quality signal. And then apart from these levels, right? When it has broken, there's a volume participation also. So Edelweiss maybe is likely to go or likely to make new highs, right? So it's somewhere around this level, right? It has broken this level also, right? So all the more good things. Look at candlestick charts. Perhaps you'll find pattern or two more, right? Tweezer is here, right? Gap up is here. Even body range gap up is here, right? So lot of other things also will start spotting things, right? This was an extremely good Tweezer from where it moved at a proper, right? Start looking at this. This is again a variation of Tweezer, not a textbook quality, but it's also giving you same results. This perhaps is also one, right? How do we spot? We go to weekly. We may be able to spot that in a weekly one. No, we couldn't, right? We couldn't. So not necessary that daily will automatically get converted to weekly, but once you gain this kind of the understanding, right, a lot of these things will automatically start coming for you, right? You'll start imagining that ये weekly में कैसे दिखेगा or how will it look like in a hourly chart, right? That's with some practice you'll be able to get there. All right. So that was about a range breakout. I hope that you will be able to make good use of it, right? A powerful pattern, very, very powerful. For price action, guys, this could be a very, very good tool for you, okay? Then what do we do? Next one, range breakout, we have seen, right? Some examples of range breakout, right? Once it has given a breakout, then it has really given good thing, some real world example, not too far off, right? So it's somewhere around November, December time frame, right? Breakdown, again this thing, pretty recent ones again, right? This calendar year, team has found few 50 range breakout. So the higher the range, right, the better it is, right? Higher the range, number one, and the higher the depth or basically mountain, right? So either a valley for breakout or a mountain for breakdown, or in this particular case it's a consolidation. So this is also very nice. So this particular zone, I think the analysts have created for me for this session is they have found a very good consolidation zone, and then it is giving breakdown. So again, a very good example, actually, very, very good example. Okay, then what do we have? So before we go, I know it's going little too long, right, session. Do you want to wrap up or you have more questions? Customize your candlestick pattern, we have covered. Make your own trend, we have covered. Price action with volume, we have briefly covered. So I don't think, unless you guys tell me that we have to do it, we'll spend time on it, right? Usage of price action, you can do it for swing trading, intraday trading, scalping, even for long term, right? Advantages for smart people, or I would say smart, for experienced traders, they'll be able to spot a lot of these things, as we have tried to spot few during the session, right, with the help of you guys. Thanks for that, guys. You'll get good favorable entry exit points. It is being the price, right, which is always the latest in point of time. It is leading by nature, right? Very easy to spot with certain practice. Once you understand it, you can forget about technical analysis, other part of technical indicators. You can forget about fundamental analysis. You can forget about any other analyst who is giving you feedback or all these things, right? This can be a completely independent one. The key is keep it simple and stupid, right? KISS principle. Some of the patterns like candlestick patterns or head and shoulder or triangle, what we have seen can be tested. Narrow range, wide range can be tested, right? Obviously, every advantage comes with certain disadvantage. It requires experience. It is very subjective. For example, in certain cases, you may see a false breakout. To me, see that, oh, it's still part of the trend, right? So it's very, very basically interpretation uh, uh, difference, right, between different analysts, right, requires a lot of focus, right? There can be error in judgment, right? If you don't read it properly, perhaps that's where you lose some good things. Okay. Uh, then price action versus technical indicators. For those guys who have attended my previous session on 24th December, right? During the technical indicator, what we did is we tried to be very, very close to the fundamental, to the price action. Uh, uh, for every price action thing, right? What you see, what you observe, there's almost an equivalent technical indicator. So you go from this route or you go from this route, you become master of this or master of this. The end result is same. It's like a lot of profitable. If you mix and match too many things, obviously you'll make disadvantage, right? So some things you can, some of the price actions is basically viewing those things in the chart. So you cannot obviously automate your those things. It's very difficult to automate. Some patterns you can automate, so it's semi-automatic. Technical indicators, you can purely apply algos, right? Any technical indicator. So algo trading technical indicator would be better. This is representation of price movement. This is representation of basically price action, right? This is representation of price action. So this is actual price movement. This is derived from price movement. So since it is derived from price movement, it is by nature lagging. This is leading. The moment breakout has happened, you'll get to know. Indicator may take a day or couple of days to give you the same signal what price action gives. So this is the purest and most raw form of analysis. Takes time to master. It is very easy to understand because all that you really care is this is a overbought, this is oversold, this is reversal, this is accumulation, or this is distribution. In technical indicator, you'll get there. As I mentioned, subjective versus objective. Early signal directly related to leading. Lagging is slightly later signal, right? But this is too good. Okay. So basically, you can go from this route. Don't have to look at this world. You'll still be doing good if you understand it. Or if you are coming from this route, all your learning and everything, you can simply focus on technical indicators without having much to look at these things. You'll still make good profitable trade. The key is to understand it well, right? Price action screener, we have pre-screened, custom screener, DIY screener. We have dealt in great details. You can set alerts on price action. Maybe in one of the session, we'll do a mock trading or mock run, right? Pretty easy for us to do. It's just that we'll do on one of the Saturdays in one of the sessions where we'll do that to see how the real world is moving on that particular thing. Okay. Price action, and that's about it, guys. Let me see if there's any question. Sundar, you've just showed internal of Nifty with delta. Sorry, Sundar, I don't want to go into future and option because that will bore a lot of people, right? The idea of this one is purely price action. Options is third level derivative. Trust me, right? That's what we are talking is first level only, right? And then you are talking about Greeks. Greeks are like even a derivative of derivatives, right? So I don't want to get into the Greeks here, right? Clearly not the best forum. Then screen of strong trend. Mehul, I remember we saw, so maybe I'll just use that an opportunity to show you a couple of things, right? Number one is basically you need to look at trend line, rising trend line, long term. You'll find that these are the stocks which are in uptrend, right? This is one way of looking at it, right? Uptrend. The second example would be rising channel. Sorry, channel is here. We have done some ascending channel on a long term on NSE 500. Let's see if we get something, right? So you'll see that rising channel, right? This is uptrend. Another example of looking at an uptrend, right? Second example. Third example would be go into common structural patterns. Look at higher high, higher lows on a longer term period. You'll find you will not get a lot of good example in long term because last 1 year was pretty much in sideways market, right? See, this is higher high, higher lows, right? All the spots which are mentioned out here. All these things are also mentioned over here. You'll see that higher high, higher lows, right? These are in strong uptrend market with some consolidation at times, but the higher is being higher and the lower level is not yet breached, right? The lower level is not yet breached. So these are in proper uptrend market. This is a better example, right? Some examples may be good, some may not be that good. This is another short term, much shorter period example. So maybe I'll take it to 6 months to see that, right? Higher high, higher lows, right? So similarly, this is another pattern, and there are various other ways. One of them is TSR, basically strength index, right? Briefly touched upon in this one, in either this session or in morning session. Slightly missing out on those things. Slight bullish stocks in top X% of the stocks. So Mahindra CI, I think we covered this in one of the sessions, right? So this will give you immediate momentum ones, right? Where the momentum is pretty good, right? Momentum is pretty good. Look at the long term, the momentum is good. Either it has come very recent. So what it picks is, it picks long-term trend, it picks short-term trend. It tries to give the weightage of whether the short-term is too good to ignore the long-term. So in this case, the long-term is not good, but the short-term is too good to ignore the long-term, right? So that's the kind of back-end work we do, or the software does to find those things. So long-term is bad, right? But if you see, the momentum is too good, right? It has broken all the forces, likely to break this level also, right? So these are some of the ways of looking at it, right? So it's a very complex way of determining this. This is a reverse head and shoulder, if somebody can spot it. This is a reverse head and shoulder. Similarly, you'll find a lot of patterns. Once you get used to it, you'll get lots and lots of patterns available for you, right? So that was about trending, right? I hope that answers your question. Strong trend. ADX is another one, Mehul. Of course, not part of this thing, price action. ADX indicator, if you are looking at maybe the technical screener, look at indicators, ADX, strong trending stocks, right? You'll find these stocks, I'll take the stocks, right? So this will help you to find the stocks which are trending, right? About being one of them. Let's see. It will tell you only trending, right? So I'll maximize, right? About is trending, right? So ADX will also help you to find that. Not part of price action, a slight deviation, right? It can be uptrend, it can be downtrend. So ADX is basically trend agnostic. It will tell you both uptrend and downtrend, right? So that's another way of finding this particular thing. Okay, so that's pretty much about what we wanted to cover. I know we have exceeded the time by a substantial margin, but we did see some participation. We wanted to answer those questions to keep your interest and to know about the platform better, right? So any other question before we wrap up, or we give you your weekend back or your tea time? Nope. So guys, if you like this session, please do share with people, with your friends, the kind of setup that we have, right? So for last 12 years, we were almost like last 10 years, first 10 years, we almost gave everything for free. Now what we are doing is we are doing at a very nominal cost. The idea is to generate jobs, create awareness. So our prices are reasonable and will remain reasonable. The help that we need from you guys, if you like it, if you don't like it, then obviously no point, we don't want to force. If you like it, do share with your friends, not only about the session, but about the platform also. All right, guys, so we wrap up. It was a nice session. Thanks, Girish, for mentioning it. All right, so let's wrap up. Regarding videos, we'll see if we can, we will, right? As we have always done. Few sessions we were able to recover last time. You were there, very informative. Thank you, Umesh, for staying till end of the session. We hope that this translates into some of your profits also. All right, so we wrap up. Thank you guys for joining, and we wish you again Makar Sankranti, Bihu, all Pongal, lot of festivals. For some of you, it's New Year. So hope that the change of direction of sun changes the fortune for you in a positive way. If you are already fortunate ones, we hope that it's a continuation pattern. Yeah, chalo, bye bye. Thank you, Tata.